Mabuhay, and welcome back to Parafit PH
Your one-stop shop.
for all things personal finance.
That's right.
I'm your host,
And I'm mine.
and joining me today is our financial expert,
Glad to be here.
here to help us decode the world of real estate investing.
Absolutely.
Today's deep dive is all about making your money work harder for you,
Especially
especially if you're an OFW or a young professional looking to build a future beyond your 9 to 5.
beyond that daily grind.
Okay, so picture this. You own a little piece of SM Mega Mall
Okay.
or Ayala North Exchange,
Nice.
and every quarter you get a check in the mail.
Not bad, right?
Not bad, right?
That's the idea behind REITs.
Okay.
Or real estate investment trusts.
Great.
Think of them like companies that pool money to buy and manage properties.
Okay.
Like malls, office buildings,
Mm.
even things like cell towers.
Wow.
And then they share the profits with you, the investors.
So I can basically become a landlord without actually dealing with tenants.
Pretty much.
Sign me up.
And what's really great for Filipinos is that Philippine law requires REITs to distribute at least 90% of their distributable income as dividends every year.
Really?
So you get a consistent stream of passive income just for holding those REIT shares.
90%. Wow, that's a much bigger slice of the pie than I imagined.
It is.
It's like getting a regular taste of the Philippine economy's growth
Delivered right to your bank account.
delivered right to your bank account.
Exactly.
I love that.
And that steady income stream can make a huge difference.
Yeah.
Especially if you're sending money home or trying to reach your financial goals faster.
So for our listeners who are hearing about REITs for the first time,
Yes.
what makes them so appealing compared to, say,
Compared to?
buying a condo unit to rent out?
Well, for one, the barrier to entry is much lower.
Okay,
You don't need a huge lump sum to get started.
that's good.
Some platforms even let you start investing with as little as 5,000 pesos.
5,000 pesos.
That's way more attainable than a down payment on a condo, right?
Yeah, 5,000 pesos is like, what, 2 weekends of overtime?
Right,
It's definitely more manageable than a down payment.
right. And another big advantage is liquidity.
Yeah.
With REITs, you can buy and sell shares quickly through your stockbroker.
Much faster.
It's much easier and faster than trying to sell a physical property.
Okay, so if I suddenly need cash for an emergency,
Yeah,
I don't have to wait forever to liquidate my investment.
exactly.
That's good to know.
Now let's dive into the Philippine REIT landscape.
Okay.
As of today, we have 8 REITs listed on the Philippine Stock Exchange.
8.
REIT, CREIT, DDMPR,
Okay.
PhilMate,
Got it.
PREIT, RCR, and VREIT.
That does sound like a lot of options.
It is quite a few.
How do we even begin to make sense of all these different REITs?
Don't worry, we'll break it down for you.
Okay.
Each REIT has its own unique focus,
Yeah.
portfolio, and risk profile.
Okay.
For example, our REIT, backed by Ayala Land, focuses on a mix of office, retail, and industrial properties. They have some pretty well-known landmarks in their portfolio, like Ayala North Exchange and Virtus North.
So it's like having a piece of these iconic buildings.
Yeah.
I could definitely see the appeal there.
Right, and then you have CREIT,
Okay.
which is all about renewable energy.
Interesting.
They hold solar power facilities
Okay.
and have a dividend yield of around 7.34%,
Wow.
with potential for even higher returns as the demand for clean energy grows.
So if our listeners are looking for a way to invest in a more sustainable future,
Absolutely.
CREIT might be worth exploring.
Exactly. It aligns with both financial goals and a commitment to the environment.
Okay, what about DDMPR? What makes them stand out?
DDMPR is sponsored by Double Dragon Properties,
Okay.
focuses on office spaces.
Office spaces.
However, they have significant exposure to PIOGOs,
Wait, PIOGOs.
which are Philippine offshore gaming operators.
What do they have to do with REITs?
Well, many PIOGO companies used to lease office spaces from DDMPR.
Oh, I see.
But when the government implemented a ban on PIOGOs,
Oh, right.
it hit DDMPR's occupancy rates pretty hard,
Yeah.
and their share price took a hit.
So even though DDMPR might have looked attractive initially with its high dividends,
Yeah,
that reliance on one specific type of tenant backfired when things changed.
yes. This highlights a crucial point.
Okay.
Understanding a REIT's underlying assets and the potential risks
Yeah.
is just as important as chasing high yields.
For sure.
Let's move on to PhilArt.
Phil.
They're sponsored by Philinvestland
Okay.
and focus on office spaces in Alabang.
Got it.
They have a decent dividend yield
Mm-hmm.
and some exciting plans for expansion and diversification.
Okay, so PhilArt is more about steady growth and potential for higher returns down the line.
That's a good way to put it.
Okay, what about MREIT?
REIT, sponsored by Mega World Corporation,
Mega World.
is known for its high dividend yield
Okay.
and a focus on office spaces,
Office spaces again.
although they do have a diverse portfolio, including malls and hotels.
So they're trying to spread the risk a bit more.
A little bit.
Okay. Then there's Prefeet, right?
Yes. Preece was actually the Philippines' first energy REIT.
Wow.
And it's quite unique
How's
because it focuses on social and missionary electrification projects.
So aside from potential financial returns,
Right.
you're also contributing to bringing electricity to underserved communities.
Exactly.
Wow, that's a pretty compelling combination.
It is.
Making money while making a difference.
It is a powerful way to align your investments with your values.
I bet our OFW listeners,
Yeah.
especially those who send money home,
Especially.
would appreciate that.
I think so.
All right, we've got 2 more to go.
2 more.
What can you tell us about RCR?
RCR is sponsored by Robinson's Land Corporation
Robinsons.
and has a well-diversified portfolio across the Philippines,
Uh-huh.
including malls and office buildings.
So a little bit of everything.
They're known for their consistent dividend payouts and a strong balance sheet.
Okay, so they're playing the long game,
Yeah.
aiming for stability and reliability.
Pretty much. And finally, we have the REIT,
V-rate.
sponsored by Vistaland,
Okay.
the company behind a lot of major malls and commercial spaces.
How's it?
They offer a high dividend yield
Mm-hmm.
and are benefiting from the post-pandemic recovery in the retail sector.
Okay, so V-rate is a bit more of a bet on the continued resurgence of malls and shopping centers.
That's one way to look at it.
Wow, we've covered a lot of ground.
We have.
I can already see our listeners' heads spinning trying to process all these different REIT options.
Yeah, it can definitely be overwhelming, especially if you're new to investing.
I agree.
So let's try to simplify things a bit.
Yes, please.
Before we get to part 2,
Yeah.
maybe you can give us a quick framework
Okay.
for how to actually choose the right REIT for our individual needs and goals.
Let's start by considering your risk tolerance.
Risk tolerant.
Are you someone who's comfortable with a bit of a roller coaster ride?
Yeah,
Or do you prefer a smoother, more predictable journey?
that's a great place to start.
Okay.
If you're more risk averse, you might lean towards REITs like our REIT or RCR,
Okay.
which are known for their stability and consistent dividends.
Consistent dividends.
But if you're willing to take on more risk for potentially higher returns,
Yeah, I like risk.
DDMPR or V-REIT might be more your speed.
Okay, so it's kind of like choosing between a reliable jeepney ride
Okay.
and hopping on a habble, right?
Exactly.
One is steady and predictable.
Uh-huh.
The other is a bit more thrilling, but comes with added bumps.
Right.
I like the habble analogy.
And speaking of goals,
Goals.
are you primarily looking for a steady stream of passive income,
Passive income.
or are you hoping for capital appreciation?
Capital appreciation.
Meaning you want the value of your investment to grow over time.
That's a good point. I guess it depends on your timeline, too.
It does.
If you're saving for a house or your kid's education,
Yeah.
you might want something more predictable.
More predictable.
But if you're thinking long-term, like retirement,
Retirement.
then maybe you can handle a bit more risk.
Right. Once you've got a handle on your risk tolerance and investment goals,
Okay.
the next step is to dig deeper into the REIT's portfolio.
The portfolio.
What kinds of properties do they own?
Properties. Okay.
Are they diversified across different sectors like malls, offices, and warehouses?
So it's not just about the name or the dividend yield.
No, it's not.
You really need to look under the hood and see what's driving those returns right.
Absolutely. And don't forget to research the sponsor company's track record.
Track record.
Are they a well-established developer with a history of success?
Uh-huh.
Or are they a newer player with less of a proven track record?
Okay. So it's kind of like checking the driver's license
Yeah,
before you get in that jeepney or hable.
exactly.
You want to make sure they know what they're doing.
You want to feel confident in the people managing your investments.
Right.
Now, I know we've thrown a lot of information at you,
Yeah.
but don't worry.
Okay.
We'll provide some helpful resources in the show notes,
Show notes.
including links to reputable Philippine financial education websites
Okay.
and the SEC's page on REITs.
Yeah. No need to memorize everything right now.
Yeah.
We just want to give our listeners a solid foundation
Foundation.
so they can start exploring REITs with confidence.
Exactly. And remember, investing is a journey, not a race.
That's right.
Speaking of journeys,
Okay.
let's talk about the practical side of things.
The practical side. Okay.
How do you actually buy REIT shares?
Yeah. How do I do that?
You'll need to open a stockbroker account.
A stockbroker account.
Think of it like your passport to the Philippine Stock Exchange.
My passport.
There are several reputable brokers out there.
out there?
Like
Ideal Financial,
Seal Financial. I've heard of them.
which you might have seen advertised.
Yeah, Seal Financial keeps popping up on my social media feed.
Yeah, they're popular.
They seem pretty popular.
They are. But it's always a good idea to compare different brokers and see which one best suits your needs.
Okay.
Once you've opened an account and funded it.
Yeah. You can start buying REIT shares just like you would buy stocks.
Okay, that sounds straightforward enough.
It is.
But what happens after I buy my shares?
Yeah.
Do I just sit back and wait for those dividends to roll in?
Well, ideally, yes.
Okay.
You want to hold your REIT shares for the long term to benefit from both dividend income and potential capital appreciation.
Okay, both.
But that doesn't mean you completely ignore them.
So it's not a set it and forget it kind of investment?
Not exactly. It's important to monitor your investments periodically
Periodically.
and stay informed about any changes in the market or the REIT's performance.
What kind of changes should we be looking out for?
Things like changes in occupancy rates,
Occupancy rates.
new acquisitions or developments, and of course, any major economic shifts that could impact the real estate sector.
Economic shifts.
For example, remember how we talked about DDMPR and the POGO ban?
Yeah.
That's a prime example of how external factors can influence a REIT's performance.
So even though REITs offer a more passive way to invest in real estate,
Right.
it's still important to stay engaged and informed, right?
Absolutely. Knowledge is power, especially when it comes to your investments.
Okay. Let's say I need to access some cash quickly for an emergency.
Emergency.
How easy is it to sell REIT shares?
Relatively easy.
Is it as complicated as selling a physical property?
That's the beauty of REITs, their liquidity.
Liquidity.
You can sell your shares fairly quickly through your stockbroker during trading hours.
So just like stocks.
It's much more efficient than dealing with the paperwork and time involved in selling a condo unit or a piece of land.
It definitely takes some of the stress out of things.
Yeah.
Now, before we move on,
Yeah.
you mentioned diversification earlier.
Diversification.
Can you explain why that's so important?
Sure.
Especially for our listeners who might be new to investing.
Of course. Think about it like this.
Okay.
You wouldn't put all your eggs in one basket, right?
All my eggs in one basket.
No. The same principle applies to investing.
Okay.
Diversification helps you spread the risk.
Spread the risk.
By investing in different REITs with varied property types and locations,
Different REITs. Okay.
you're less exposed to the ups and downs of any single sector or market.
So even if one REIT is having a rough time,
Yeah,
your overall portfolio is less likely to take a major hit.
exactly. It's about creating a more stable and resilient investment strategy.
Okay. I'm starting to see the wisdom in diversification.
Good.
What other nuggets of wisdom do you have for our eager listeners?
Well, there's another important concept called peso cost averaging,
Peso cost averaging.
which can be especially helpful for beginners.
Beginners.
This basically means investing a fixed amount of money in REITs regularly,
Okay.
no matter what the market is doing.
So even if the price dips, I should keep buying.
Keep buying.
That seems counterintuitive.
I know.
Wouldn't it be better to wait for the price to go up again?
That's a common misconception.
Oh, okay.
With peso cost averaging, you're actually taking advantage of market fluctuation.
Market fluctuations.
When prices are low, you're buying more shares for your money.
More shares for my money.
And when prices are high, you're buying fewer shares.
Okay.
Over time, this strategy helps you average out your purchase price
Average it out.
and potentially reduce the impact of market volatility.
So it's like buying your favorite food in bulk when it's on sale at the Palenque.
Exactly.
You get more for your money even if the price goes up later.
It's about being consistent and disciplined with your investments,
Okay.
rather than trying to time the market perfectly.
That makes sense.
Hmm.
I guess patience really is a virtue when it comes to investing.
It definitely is. Remember, REITs are not a get-rich-quick scheme.
No, they're not.
It's a long-term investment strategy
Long term.
that can help you build wealth steadily over time.
Okay. I think we've covered a lot of ground here.
A lot of ground.
So before we wrap up this part of the deep dive,
Before we wrap up,
is there anything else you think our listeners should know about choosing the right REITs for their portfolios?
yes, actually, there's one more point I'd like to highlight. It's important to think about your investment horizon.
Investment horizon.
How long are you planning to hold these investments?
Okay.
If you're saving for a short-term goal, like a down payment on a house in a few years,
Uh-huh.
you might prioritize REITs with a history of consistent dividend payouts.
So like RCR, which you mentioned earlier with their solid track record of dividends.
Exactly. But if you're investing for retirement,
Retirement.
which is a much longer horizon,
Right.
you might be more comfortable with REITs that have a higher potential for growth, even if their current dividend yields are a bit lower.
That makes sense. It's like planting a mango tree.
Okay,
You have to wait a few years before you get to enjoy the fruits.
right.
But once it starts bearing fruit, you've got a steady supply for years to come.
That's a great analogy. And remember, we're here to help guide you through this process.
Ah,
We'll be providing links in the show notes to resources that can help you compare different REITs
okay.
and make informed decisions based on your individual needs and goals.
Okay, I think our listeners are starting to get a good grasp of how REITs work and why they can be such a powerful tool for Filipinos looking to build wealth.
For sure.
But let's be real for a second.
Let's be real.
Some people might still be hesitant to invest in something they don't fully understand.
It's understandable.
What would you say to those who are still on the fence about REITs?
Well, I'd encourage them to look at what the big players are doing.
The big players.
For example, did you know that even the Social Security system,
The SS.
the SSS, is investing heavily in REITs?
Wait, seriously. The SSS, the institution that handles millions of Filipinos' pensions,
That's right.
is putting their money in REITs.
They see the value in REITs as a long-term investment strategy
Okay.
that can generate steady income.
Steady income.
If an institution like the SSS is confident in REITs, that should give individual investors some food for thought.
It definitely makes you think, okay, so we've covered a lot of ground today.
We have.
From demystifying REITs
Yes.
to exploring the Philippine REIT landscape
The land.
and providing a framework for choosing the right investments.
That's right.
But before we say goodbye,
Before we say goodbye,
what's the one key takeaway you want our listeners to remember?
REITs offer Filipinos, especially OFWs, and young professionals a unique and accessible way to participate in the real estate market,
Okay,
even without a huge amount of capital.
I like it.
It's a chance to grow your wealth steadily, build a passive income stream, and be a part of the Philippine economy's growth.
That's a powerful message. It's about empowering Filipinos to take control of their financial future
Absolutely.
and build the lives they dream of.
Exactly. And remember, we're always here to support you on that journey.
Salamat for joining us on this deep dive into the world of REITs.
It was my pleasure.
We hope you found it informative and empowering.
We did our best.
And don't forget to subscribe to Parafit PH for more empowering financial deep dives.
We'll see you soon.
We'll be back soon with more tips and strategies to help you achieve your financial goals. Hanggang sa muli.